All right, Disruptors. I got a very special guest. His name is Alex Little. He is the founder of Little Financial. Alex, you're based out of Tampa. I want to welcome you to the show from New Orleans. We both have something in common, unfortunately, and it's called hurricanes. And you just made it through a hurricane. But welcome to the show.
Yeah, thank you for having me.
Yeah. So, um, you all did okay in where you are in Tampa, but a lot of people along your coast took a hit. And in Louisiana, we pay attention to that. I've been through well, since Katrina. I've had them as a child, but Katrina's the first one that was kind of like my landmark, the benchmark, you could say, for hurricanes and having dealt with it. So I understand the process, and that's part of business, right? Whether no matter where you're in business, you need to adjust for events. And sometimes people put themselves in financial crisis unnecessarily. So we're going to talk about how to prevent that. That's a crisis that doesn't need to happen.
Mhm.
But before we get started, what is one thing? First of all, welcome. Glad to have you. And what is one thing that you may have done differently when you were starting up your business?
I think if I could do it over again, I would probably have started sooner of marketing and getting more invested in my local community
Wow.
because I started my business the same time of just moving back to Florida.
Hmm.
So I didn't really know anyone in the area, and I have a virtual firm, so like I can work with anyone across the United States. So I was doing that national, marketing type of deal,
Hmm.
and just the mindset of a lot of people is like they're accountants and the financial advisors. There's a lot of people that still like that local touch,
Hmm.
somewhat close to them that they can, meet in person if they have to. And I think getting more invested in that sooner probably would have been my biggest change.
Well, that's an important point, because I always say when you're starting a business, whether it's promotions or marketing, you start in your backyard,
Oh,
and
yeah.
and that makes sense. It makes all the sense in the world. Well, we're gonna help people also address some other things they shouldn't do, or maybe should do better or a different way in a second. One more question before we jump into that. Who or what are you grateful for that helped you get you where you are today?
I would say a gentleman by the name of Michael King.
Hmm.
He has a course basically teaching people, either accountants or fraction CFOs, how to scale a fraction CFO firm.
Hmm.
Because I started my firm as a fraction CFO only.
Hmm.
I didn't have the accounting and tax side of my practice like I do today. And that course really helped me have a great like foundation for a framework for how the structure of my business and a good idea on scope of services because that's especially in the accounting world too. Um, Scope of services and just saying yes to anything the client wants
Yeah.
you to do is really a big problem. So having that framework of this is what's worked for him in the past and this is how he's doing things, like that framework was just such a huge boost to learn years of experience in just a few hours basically.
That makes sense, and that's the beauty of mentorship. I'm a huge proponent of mentorship, and that's why he has saved you thousands of hours of work probably. All
Mhm.
right, and you're going to be a mentor to probably a lot of people in the service industry, because you are an accountant, but you in your service, financial services, are very unique. You found a niche that covers three areas. Well, what are those three areas, and why did you do that?
Yeah. So the specialties for my firm and me personally are home services, construction, and real estate.
Okay.
And I did that mainly because that's my experience that I
Yeah.
had. I from a young age, I was taught by my dad to like, be involved in real estate investing. And I'd worked for real estate investment companies, property management companies. So I had that background. And then one of my side businesses that was doing lead generation marketing
Mm.
was focused on doing that for home services businesses. So carpet cleaners, pool maintenance, like that. So I kind of learned, you know, not the ins and outs of all those businesses, but like a
Mhm.
general idea of a lot of how they operated so that I
Mhm.
could market for them properly. And then with the construction, I kind of tripped into that one. One of my best friends He became a CEO of a custom home building company
Mhm.
and a renovation company, and they were struggling. And actually, right after I started my firm, they asked me to take over the accounting for them. They were my first accounting client.
Mhm.
And I was working like 50, 60 hours a week on their business alone. I didn't really grow my business
Mhm.
for about like 8 months of my starting out. But I learned, how a general contracting company, custom home builder, operated in and out. And, I never intended to use that as one of my industries, but I was
Mhm.
like, well, I've learned so much over the past 8 months. It wouldn't make sense to not use, that knowledge to help other people.
And I think it's important people understand your background, right? Because you laser targeted in on a niche. There's a lot of accountants. My accountant services a whole, my bookkeeper serves a whole slew of industries, but I
Mhm.
don't know that he's laser targeted at one, which is what those three areas kind of come together.
Mhm.
And that makes you unique. In fact, that what makes you unique, the fact the way you dress. Because I mean, if you talk accountants, people thinking buttoned up suit, right? But
Mhm.
you speak in the language, you can speak the language to the people in the industry. And let's talk about the five biggest mistakes you see people in the home services the traps that they fall into that they can avoid to help them become more profitable, have better cash flow, etc. And home services, how do you define home services? I mean, you got the commercial, you got the construction side, you got the real estate. Home services, everything from roofing to you mentioned carpet cleaning, painters. Is that how you?
So I would say home services, anything where they come to your homes. That would they
Okay, okay,
often include like a moving company
okay,
because it's like not a fixed location. They come to you. So that
gotcha.
could be pool maintenance, that could be carpet cleaning, pest control, moving companies, anyone that comes to you, like a maid service that comes to your house.
Okay,
So like there's a lot of overlap between home services and construction because you could say HVAC and plumbing are home services. Like that's can also be, a construction side too.
and I think there's so many mom and pop businesses too out there. I mean, I work with a lot of franchises,
Mhm.
and in the home service sector, and a lot of them when they're starting out, they will help their new franchisee with the books on the backside because they realize how critical that is, and they help them prevent some mistakes. Well, there are thousands and thousands of more people that are independents in the marketplace in every city across the United States. And that's the issue. We can address five of the biggest mistakes that you see on a regular basis that they can avoid and how to avoid them. Where would you like to begin with those?
Yeah.
You got a few
And
in your deck of cards right there.
yeah, I've got a lot, but we'll just do five for today. And
Okay.
the top ones I can think of, a couple of them might be like contractor specific from more construction side, but we'll go through it. So one that applies to every business, and it's like 90% the reason why most people come to me originally is for like lack of cash flow forecasting. They just don't know the things that keep them up at night. You'll ask small business owners and they'll say, oh, like it's my marketing. I need help with this. But like what keeps them up at night really is their finances. Like, can I make payroll in 2 weeks? Can
Hmm.
I afford to hire this new employee, etc. And the biggest thing is it's very simple. Like I have a free cash flow forecasting tool that I send out to people
Yeah.
that I talk to. And it's really just putting in like when you expect to receive cash from your clients, your
Hmm.
customers, and then have all your expenses, below that of cash outflow, like when the cash actually leaves the door.
Hmm.
And that can help you in so many ways because like the biggest fear is the unknown and
Yes.
knowing when, cash is going in and out and like where you might be out of money, like
Hmm.
knowing that weeks or days ahead, if you're that far or months ahead, like
Hmm.
that is a huge tool to not only know your financial situation, but also give the scenario plan and like see if I can afford a new piece of equipment or whatnot.
Yeah.
Well,
And cash flow is the lifeblood of every business. Without it, that's the
cash is
cost.
king. Yeah.
Yeah.
And
Cash is king.
a second one I'd actually add that is on top of that is that revenue doesn't equal cash. I
Mhm.
see a lot of people that the question is always, they're making money, but they still broke.
Mm.
And it's because they see, like, they look at their P&L and they're like, oh, look, I'm making so much money. I've sold so much stuff, but then they look at their bank balance and it's so low. And they're like, where's all my money gone?
Mhm.
One of the biggest problems is that just because you invoiced for something doesn't mean that money just all of a sudden shows up in your bank account. Like, you still
Mhm.
have to collect it. And there's
Mhm.
a lot of, I can bet you that most small businesses can look in their QuickBooks or their accounting software, look at their outstanding accounts receivable,
Mhm.
and they'll have invoices from like 6 months, 1 year, 2 year, 3 years ago that are still outstanding
Like accounts
that
receivable.
they
Yeah.
just didn't really know about.
Yeah. So
So that's the biggest thing is, revenue is nice, but cash is king because it doesn't matter how much revenue you have if you never receive the money for it.
100%. All right. So you hit on the first one with a little bit of a bonus there. What's the second one?
Well, I would say that would probably be the second one is that
Okay.
is such a huge thing. But
Okay.
no, number three would be anyone that does a project. Um, Estimating your project is so critical to making sure that you actually have a profit at the end of the day.
Mhm.
And a lot of contractors don't really think about all of the costs related to doing that project.
Mhm.
And time again, they'll forget small little costs. They're like, oh, yeah, we did spend like money on that little thing for that project. And they'll routinely be estimating projects that have like a 30% profit margin. But then when they actually if they do ever review the project afterwards, it'll end up being like 17% because there
Mhm.
was lots of costs that happen every project that they just forgot to include it in their estimate, or their estimates like a template gets out of date.
Mhm.
Like keeping that up to date and including every single cost you can potentially use on that project is so critical to having a profit at the end of your day.
How do you advise them to capture that cost? What do you coach them on?
I mean, like the easiest way probably is just looking at all the costs that relate to a project you've already completed
Mhm.
and run through it and be like, try and see are these costs going to happen again on another project? And just that's the easiest way.
Yep.
Um, it's really hard when you're first starting out and you have no projects data to go off of. That's probably the easiest way. Just looking at what have you spent money on in the past, um, to see like what's gonna happen next project.
Sure. Sure. Um, and the next one's really important. It kind of ties back. Well, the next one's really important. Uh,
Yeah.
the purchase.
So, and this will be number four. So we'll
Yeah.
have a bonus one,
Yeah.
right? Number four is not having a purchase order process.
Mm.
If you deal with subcontractors or vendors that have, you're getting materials from, so again, kind of a contractor thing. Um, a lot of contractors that I see, mm, they'll just come up with the estimate. They might get a bid from a subcontractor or,
Mhm.
materials provider, and use that, but then they won't like create a purchase order and like have that actually be approved by the vendor,
Mhm.
and hold the vendor to that cost.
Mhm.
Um, there's change orders if things happen type of deal, but like you should be going off of that because I see time and time again where a contractor will, if they do purchase orders, will get a vendor to agree to an amount
Yeah.
on the purchase order. But then when they get the invoice when the project's done,
Uh,
they'll pay off the invoice. And lots of times the invoice doesn't match the purchase order.
yeah.
Like you have to enforce that. You have to actually enforce that process because, again, that estimated 30% profit margin can quickly come zero if you're paying your subcontractors like more than the amount than
You
you
agreed to it to
estimated
start
and they
with.
agreed to start with. Yeah.
Yeah, that makes sense. And that's easy. That's so easy to overlook.
Yeah, no,
It's
because
so.
like, hey, you just assume like, hey, like this is the purchase order, this is what you said you would do it for. Of course, the invoice can be for that amount, and lots of times that's not the case.
Yeah, that makes sense. All right. What's the next one?
Yeah. And number five would be using customer deposits for
Mm-hmm.
your company's operating costs. Again, on the contractor thing, but let's say you get 10,000 deposit for a project. Well, like a small percentage of that is your profit, like once you've actually started doing work on the project,
Mm-hmm.
but the majority of that should be set aside towards the materials and labor to do that project.
Mm-hmm.
Time and time again, I see people get a deposit and they're like, okay, this is my money now. Let me spend it on their own payroll or on, their operational costs, like SG&A, so
Mm-hmm.
general, and administrative stuff, office expense.
Mm-hmm.
When it's like, okay, but then when it comes time to pay their subcontractors, they're like, oh, well, now I don't have any money because I
Mm-hmm.
spent the deposit already. It was supposed to
Mm-hmm.
be for that. So the thing I tell people to remember is that if at any point in time, if the customer said, I want to end this contract with you, you are legally obligated to give that money back, and how much you need
Mm-hmm.
to give back is something you should have set aside, because that's not your money to play with. It's just your money in your hand, like their money in your hands, that you're going to give to a subcontractor or vendor or whatever.
It's
But
kind of like a Ponzi scheme.
kind
Borrowing,
of,
using somebody else's money. Yeah, I
well,
get it.
and like that's why I saw a lot of times, like my friend's company, like when he first started, that's how they were kind of doing things, is that they would take one customer's deposit and like pay the last project's
Yeah.
subcontractors and operating costs, and then they'd have to get another deposit from a customer in order to pay for the next thing, and later in
And
that road.
one little mistake, and they got a hiccup, and then they got it real. Then they go back to the cash flow problems.
They're kicking the can down the road, yeah. So it's a big problem once it gets started.
Well, that probably brings us to the last one.
Yeah. So bonus number 6 would be just an emergency fund. And I know this gets, brought up time and time again. People talk about it all the time,
No.
but, and I've had this problem in the past too, is that like, it's true that a dollar today is worth more than a dollar tomorrow. So like you always think, well, I can invest this in my business or do something with this, and I'll have more money tomorrow. That's going to be more than that emergency fund, me just putting that dollar away, in savings. But if you always do that, then you never have an emergency fund.
Yeah.
And sometimes, there's lots of payments and expenses that you have that you can only pay in cash.
Mm-hmm.
And times are tough. Um, and, bad things are going to happen all the time. Like, one thing that really sticks out to me is the movie, The Big Short,
Mm-hmm.
about the 2008 financial
Mm-hmm.
crisis.
Mm-hmm. Mm-hmm.
And the Brownfield Fund, they talk about like they started out with like a little bit of money from family and friends, and then made so much money because they were betting on like these small risks that people ignore, that they think never happen. Like those small things, like a huge hurricane wiping out,
Mm-hmm.
New Orleans, like
Mm-hmm.
that, like can happen. People don't think you're like, oh, the risk is so low.
Yep.
It, anyways, long story short, emergency funds, things it's gonna hit, like stuff's gonna hit the fan, and things that happen at some point, and having that gives you so much confidence. And you should have anywhere from 3 to 6 months of
That's what I was
operating
going.
expenses.
That's what I was going to ask you. How much do you recommend?
3 months
A
is
middle.
it's not, I'd say minimal, but like also like acceptable. Like 6 months
Yeah.
is great,
Yeah.
but realistically, most accountants and finance people don't expect a business to have 6 months of operating costs to the
Yeah.
side. So 3 months is really the goal, and then anything above that is awesome, bonus points.
So these are some critical things that can make the difference whether a business survives or not.
Mhm.
How do you help your your clients when they come up? Somebody's coming into you and their books are a mess. You address these issues. You help them clean it up.
Mhm.
And I know you've helped some businesses become very profitable too, because all of a sudden they realize, oh, I'm just bleeding out money, and that now I can should tell. Just give us a snapshot of how you can help your clients
Mhm.
uh, correct some mistakes, basic stuff, really simple stuff that can be detrimental if they don't address it early on, because it can only compound if it can't get, like you said, to use your words, the can gets kicked down the road if you compound and cause a real crisis for them. So we want to keep the people from getting in crisis, the home services, the construction guys, the real estate, from getting in crisis. How do you help them? And then we'll do I got one more question for you.
Yeah, and I'll use a good example. So one of my clients is a pool maintenance and construction client.
Okay.
And when I first started working with him, his books were an absolute mess. We started back in May of
Hmm.
last year, so 2023. And his books were a mess. He was thinking that he would have to declare bankruptcy because like he was in his eyes in such a hole, he didn't see that he could be able to dig out of it.
Hmm.
Well, after we cleaned up his accounting, I took a look at his um kind of his process flow and
Hmm.
just his tech stack of the software that he's using, just on the finance and accounting side,
Hmm.
and simply just changing like the software that he was using and the service that he was using to send out invoices and collect payments.
Hmm.
Um, that completely changed. Like it was a game changer for him.
Hmm.
It solved so many cash flow problems because he had,
Hmm.
like I mentioned, he had invoices that were outstanding from 2021 that he didn't even know
Wow.
about because he never took the time to look into that.
Mm.
That he didn't know that he had clients that still hadn't paid him from years ago.
Hmm.
So looking at the process and figuring out like what's a better way to automate this,
Yep.
and how can we, send the invoice to the clients, get them to pay, and then save you some money on that. And we took him from near bankruptcy to the first half of this year, which was
Hmm.
from January to June.
Hmm.
He had made like 260 grand plus in profit.
There
So
you go.
bankruptcy to that, like, and then that was just from some process changes.
Just the fundam that's what I'm trying to drive home. It's the
Yeah.
fundamental things can mean the difference of going out of business or having a $200,000 profit within a matter of 6 months. So
Yeah.
anybody in the home service sector needs to pay attention. One last question for you is what's your number one piece of guidance that that you would recommend to folks that are in their own business or going into business?
Yeah. Um, It's kind of a tie between the cash flow forecasting and just having good books
Yeah.
because you can't have a cash flow forecasting without good books. That's
Yeah.
why I started as a fractional CFO and started the accounting and tax side of the business.
Gotcha.
There's so many people that thought their bookkeeper was amazing. I take a look at their books and it's just a dumpster fire. I can't get you any type of forecasting or advice
Yes.
and don't know if you're profitable or not. So
That's
what it
right.
really comes down to is if you want to make good decisions, you need good data. And in
Mhm.
order to do that, you have to have clean and accurate books.
Mhm.
And like being informed in
Mhm.
knowing how your business is doing financially right now helps
Mhm.
you make better decisions and better financial decisions going forward.
That's great. And then you could also coach them on the best tech stack,
Yeah,
best tech tools to use specific to their industry, to their business.
that's one of the biggest areas that like my firm stands out is we're not a traditional
Okay.
accounting firm doing things
Gotcha.
the old way.
Yes.
I'm very tech forward. AI and automation is like the name of our game for our actual iPhone.
That makes sense. All right. How do people get in touch with you? So they can, so they need to clean up their books or prevent some problems from happening. How do they get in touch with?
Yeah, the two easiest ways is going to uh, www.little-financial.com, so little-financial.com,
Gotcha.
or just finding or reaching out to me on LinkedIn, Alex Little. I think my um, URL is like the linkedin.com/ I am Alex Little because
Yeah.
apparently there's an Alex Little already out there.
Yeah.
And that's the
Well,
two best ways.
Well, we will have, I'll have the folks, I'll have the hot links to his website and to his LinkedIn on our landing page for you, Alex. I'll have that set up. And I want to thank you for your time. You can help a lot. One episode like this can help hundreds of businesses stay profitable and not go out of business and increase their profits for that matter, too. So I appreciate your time.
Indeed, thanks for having me on.
All right, so thank you. And that is a wrap with Alex, folks. I'll have those links. If you don't have a tight grasp on the financials for your home service business, your construction business, or your real estate business, get in touch with Alex. It can mean the difference of being a okay year, a horrible year, or a fantastic year. Tapping into see where those hidden pots of money are that you could leverage going forward to grow your business. And folks, I've got a brand new book. It's called Your First Franchise Roadmap. And if you're taking the time to listen to our show, I'd love to gift you a copy of Your First Franchise Roadmap. Simply visit and I'll get you a copy. Now, I appreciate you being here. You know the drill. Hit the buttons, hit the like button, subscribe, ring the bell, all those wonderful things, and make today a great day. Bye bye.